As many of you know, Hyliion, the highly touted electric truck and electric powertrain company, is in the process of merging with a SPAC, Tortoise Acquisition Corp. The same management team just IPO'd a second SPAC, Tortoise Acquisition Corp 2. That's what we're going to be talking about in today's video. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. In today's video, we're going to be talking about Tortoise Acquisition Corp 2. This is a SPAC that just IPO'd, and full disclosure, I do own the SNPR units. First, we're going to take a look at the SPAC structure based on the S1 filing. Then I'm going to talk about the 3 reasons why I made the investment. Then I'm going to talk about why I chose the units before the unit split happens. And be sure you stay to the end of the video where I discuss my game plan for how I'm going to invest once the units split into the common stock and the warrants. So without further ado, let's get right into it. All right, so let's take a look at some of the key aspects of the SPAC structure. And all this information is based on the S1 filing. I'll leave a link to the S1 filing in the video description. I'm not an SEC expert or anything. This is just my interpretation of the S1 filing as a retail investor. First off, the target business obviously is green energy. The business combination deadline is 24 months. The units are offered at $10 per unit for a total of $250 million. There's $250 million held in the trust. The units are listed on the New York Stock Exchange as snpr.u. The commons are going to be listed as SNPR and the warrants as snpr.ws. And of course, depending on which brokerage you use, those ticker symbols may vary a little bit. Each unit has 1/4 of one warrant. The common and the warrants won't be available until 52 days after the IPO date. I estimate that's going to be November 1st. At that time, the units, the common, and the warrant will all trade. So the units will not automatically separate into the common and the warrants. So if you do purchase the units and you want to separate them out into the common and the warrants, you're going to have to check with your broker to see how that process works, and also see if your broker charges you a fee in order to do that. If your broker does charge a fee to separate the units out into the common and the warrants, so that would be one potential downside of purchasing the units, assuming you want to split them. There will be an automatic unit separation after an initial business combination, so that's good. The warrant ratio is 1-to-1, and the exercise price is $11.50. So one warrant will allow you to redeem one common stock for $11.50 once the warrants become redeemable, which is pretty standard. Then there's the standard warrant redemption clause at $18 upon 30 days written notice, of course, pretty standard. But then there's also a warrant redemption clause if the common trades at or above $10. And there's a table in the S1 filing. Based on my understanding, that table will give you an idea of how much you would get if they execute this warrant redemption at $10. And then finally, there's the private placement of warrants at $1.50, which is pretty standard. And the way I look at this private placement, and I could be doing this wrong here, but this is how I see it, is that because the private placement of warrants is at $1.50, I see $1.50 as the intrinsic value of the warrant at the time of the SPAC IPO. In my case, I purchased the units at $10.80 per unit, which is 8% higher than the $10 unit price. So I'm estimating that I'm paying $1.62 per warrant for every 4 units that I purchased. So the first reason why I made the investment is because Tortoise Acquisition number 1 is absolutely crushing it. The common stock is up 400% in 3 months, and the warrants are doing even better, up 2,000%. So far, the merger with Hyliion is going very well for the stock. Now, just because they were successful with Hyliion doesn't mean they're going to be able to find another target, right? Well, I believe that they already have a target in mind. In the conference call with Hyliion, Vince Cubbage, the CEO and chairman of Tortoise Acquisition, who's also going to be on the board of directors of Hyliion, stated that they evaluated over 200 companies before making the deal with Hyliion. So they have a pool of over 200 companies that they can go back to. The way I think of it, they probably have a short list of 5 to 10 companies. And because they're going to be on the board of directors of Hyliion and because of the success of the Hyliion merger, I think that Tortoise Acquisition 2 is going to have a lot of leverage when they approach other companies to make a deal. Especially if they approach a company that would really complement Hyliion's strategy. If they merge with a company that can form a very strong strategic alliance with Hyliion, this could help propel both companies towards their goals. And I think that's a very strong selling point. But then I have to ask, don't these mergers usually take a year or longer? Well, not necessarily. Kensington Capital, which IPO'd their SPAC in late June, announced a merger target with Bill Gates-backed QuantumScape in just over 2 months. Because of this, I'm expecting the team at Tortoise Acquisition 2 to announce a merger in less than 6 months. I wouldn't be surprised if they announced a merger in 2 or 3 months. And the third reason I'm making the investment is the market mania that's out there for green energy companies. We've got Nikola that's up 200% in 7 months. We've got Tortoise Acquisition with Hyliion up 400% in 3 months. We've got Diamond Peak Holdings with Lordstown Motors up 200% in 2 months. And Kensington Capital with QuantumScape up 70% in 1 month. There's a lot of excitement for these green energy companies. As long as this excitement remains and the Fed keeps pumping money into the economy, I think there's a good chance that this investment will rise quickly upon a merger announcement. And bear in mind, I view this move as more of a short-term trade than a long-term investment. So I'm keeping this position as a very small part of my portfolio. All right, so next I'm going to talk about why I chose the units and some of the pros and cons. In this type of trade, I would much rather purchase the warrants. Even though they're riskier, I think that the warrants could have a lot more upside, which makes them worth the risk. So why did I decide to go with the units? Well, first, I think that once the unit splits into the common and the warrants are gonna spike in price. Because of the huge success of the Hyliion merger, I think that investors are gonna catch on to it, and once those warrants become available, I think there's gonna be a flood of money pumping up the price of the warrants. So by purchasing the units before the split happens, I think I might actually be getting in cheaper. And one of the other benefits of purchasing the units, it's not really why I purchased the units, but it is a benefit, is that my risk of loss is limited since there's money being held in a trust. If the team ends up not choosing a merger target, theoretically, the most I can lose on my investment in the units is right around 15%. And the only real con I can think of is that the short-term profit potential of the units is much smaller than the warrants. All right, so right now I own 100 units. So what is my game plan for when the units split into the common stock and the warrants? So the warrants should become available 52 days after the IPO date. So that's right around early November. If the warrants trade for a reasonable price, under $2, and Hyliion is still doing very well, my plan is to buy $300 to $500 worth of the warrants. At the same time, I plan to sell my common stock, assuming I'm at least break even on my common stock. If the conditions aren't just right, then I'll just plan on holding on to my common stock and my warrants until a merger announcement happens. After a merger announcement happens, I'm gonna reevaluate the situation and play it by ear. All right, so drop me a line in the comment box. Let me know what you think. It's okay if you agree or disagree. I'd love to hear your comments. Be sure to leave a like on this video before leaving. Thank you so much for watching, and I'll see you next time.